On to RANsquawk's e-morning briefing for Thursday the 4th of March 2010, and what is today the interest rate day in terms of the Bank of England and European Central Bank. Before I get into that, in terms of the Asian session, we did see lower equities. The Nikkei was down around % as a stronger yen did weigh on some of the exporters there in Japan. Shanghai Composite in particular did come under some selling pressure late in the session. It closed down there around 2.4%. That was after some rumours overnight of potential further hikes in the reserve requirement ratio did the rounds. However, that does still remain unconfirmed. So with the Asian equities lower, T-notes did trade up around 9 ticks at the European Open. So Bunds did open higher but have drifted lower. That's ahead of short setting for a large amount of supply today, around €4 billion worth coming out of Spain and around €8 billion out of France in various maturities, and that has dragged Bunds lower. Equities, as mentioned, following the Asian losses, did open lower, have paired slightly but remain in minor negative territory. In terms of what we're looking out for though in these interest rate decisions for the Bank of England today, that's at midday London, 12 o'clock. Markets really not expecting too much, very much a wait and see time now for the Bank of England in terms of whether or not they'll extend that QE programme. So most analysts pretty much unanimous in expecting rates to remain on hold at 0.5% and a QE to be maintained on a pause, not completely finished at that 200 level. In terms of the ECB, that could potentially be more interesting. The interest rate itself not really an issue. That should be a straightforward 1% on hold. But the press conference at 1:30 will grab most of the attention, where analysts have been, and so have ECB sources, suggesting that they could push out some of the roll-off in the 3-month auctions that they do at the moment in liquidity measures, from exiting in Q2, pushing it back to Q3 to give the markets a bit more of further time to adjust to the exiting of the various stimulus measures. Some analysts are also looking for the ECB to announce some subtle changes to those auction processes in the short end. In the 3-month, they could change the terms to that of a variable rate rather than fixed at 1%. So a couple of things to look out for there in the press conference. Take a look in terms of other things for today. The 1:30s from the US does include the initial jobless weekly numbers. We'll also have the durable revisions, and then we'll also be looking out for the US pending home sales as well as factory orders later on this afternoon. And in terms of US fixed income, we'll also be eyeing the 3, 10 and 30 note refunding. That'll be at 4 in London, so 10 in Chicago today.